Okay, good day, young Padawans. Today we're gonna be talking about this current week trade breakdown and the days that offered high probability trades on GBPUSD. So, without wasting much of your time, I would like you to stick with me and follow up the details carefully, and I hope you will find some insights in this. Last week, in my previous video, we talked about how price is rejecting from the OTE region. So if you haven't watched the previous video, you should go on it and you will get some insight from it. Right now, here, let's talk about this current week price action and the days that offered high probability trades with high risk to reward. So right here you can see clearly that I marked out Tuesday candle, Wednesday candle, Thursday candle, and Friday candle. Overall, we are bearish. We are in a bearish order flow, and right here, Monday just ranged. Tuesday didn't either sweep Monday's low or Monday's high. So here there were a series of liquidity that was accumulating here. That's why Friday is actually extremely bullish to take out all this low resistance liquidity run, all this series of liquidities. So I won't actually talk about Friday price action. I just want to focus on the days that gave us high probability trades and which aligns with the order flow. So right here, let's go to the 4-hour time frame on the Tuesday price action. 4-hour time frame. Right here on Tuesday price action, 4-hour time frame, we can see it clearly that there are more knowledge, there are more questions we do ask ourselves before we press either buy or sell button. So in this case right here, because of the sake of a public video, I won't disclose much of the knowledge right here, but I'm sure majority of CRT traders, they know about the 159 concept. So in this case right here, 1 a.m. candle, 4-hour candle range was the accumulation. Then 5 wasn't able to sweep either Monday's high or or the 1 a.m. 4-hour candle range low. So 9 o'clock, that is New York session, swept that 1 a.m. candle range high, and which becomes our CRT candle range, our 4-hour CRT candle range. So marking out that candle range high, that 1 a.m. candle range high. Sorry guys. So marking out that 1 a.m. candle range high and that 1 a.m. candle range low, which the 1 a.m. candle range low is our drawn liquidity. Now going down to the lower time frame. Last week price action, 3 days offered a high probability trade according to the order flow, and the order flow is bearish, so we are to sell. We shouldn't position ourselves in any buy trades. Those buy trades are traps, but that doesn't mean you should marry the concept or you should stick to what I said. Trade your own view and opinion. Going down to the 5-minute time frame, from the 4-hour to the 5 minutes on Tuesday price action. We are still on Tuesday price action. my network is kind of bad, but let's move on. To the 5 minutes time frame. Okay, here we are on the 5 minutes time frame. It's still loading. Okay, here we are on the 5 minute time frame, and remember, what high is this? This is our 1 a.m. high, our 1 a.m. 4-hour candle range high, and our 1 a.m. 4-hour candle range low. So right here we got a liquidity sweep. This is happening under Tuesday price action. We got a nice liquidity sweep with an order block. And why do I choose that as an order block, which is this candle right here? Why do I choose this as my order block? Sorry. Why do I choose this as my order block? This candle range right here. I choose this as my order block because, one, it swept liquidity, and not just liquidity, it also swept a key time high, which is 1 a.m. high, and also Asian range. But I don't really want to talk much about this Asian range zone. Let's just focus on the 1 a.m. liquidity, 1 a.m. 4-hour candle range. So it swept liquidity and the key time swing high, which is our 1 a.m. candle range high, and it formed at a key time. So that is what makes this a high probability order block. And also it has an engulfed bearish candle which forms an order block, an FVG. So right here we have our FVG. This zone right here, this is our FVG on the 5 minute time frame. So let's just mark out this. Let's say, for instance, your entry is here, your stop loss will be at this up right here, at this swing high, and then your take profit will be this 1 a.m. candle range low. And that's not bad. It offered a 4.65 RR. Let's just call it a 5 RR, approximately 5 RR. A 10 pip stop loss for a 47 pip take profit. So that's not really bad. That's not really bad. So now let's move on to the next. Let's move on to the next price action, which is Wednesday. So counting in as one, Tuesday gave us one of the best days to trade in this week that is aligned to the order flow. Remember, we are still respecting the order flow. So let's move on to this, to Wednesday price action. So I hope you guys can identify an order block and found something insightful from this first price action I just broken down. Now moving on to the Wednesday price action, let's go back to the 4-hour time frame, because all those entry was given on the 4-hour time frame. All those entry was given on the 4-hour time frame. So an advice that I will give you before my networks comes back is that do not get attached to any information you get about trading. Learn it from your own view. Learn it from your own view. It's better you make your mistakes and learn from it than to learn from another person's, maybe a mentor, a guru. Don't trust anyone in this industry. Just that we align ourselves to information that we hear. We align ourselves to information that we hear, and we interpret it in our own terms. Yeah, I think I got it. So we align ourselves to the information that were existing, and we interpret it in our own terms and opinion. So don't stick to any bias, any opinion. Just do it on your own way, on your own understandable way. That's just it. Now going on the Wednesday price action. This is the Wednesday price action right here, and the Wednesday price action offered a 2 candle model CRT. You don't really know about that, but let's just stick to it like this for the case of the public video. So 1 a.m. candle range high and 1 a.m. candle range low. Note, it won't actually form like this all the time. Maybe sometimes the 1 a.m. will be the manipulation and price moves immediately, but in this case we are seeing this price action right here and it formed like this. So here is it, and we project ourselves to the 5 minutes time frame. Project ourselves to the 5 minute time frame, and again remember, time is fractal. Sometimes you can find your key level on a higher time frame, maybe on the 4-hour time frame, and your entry can be on the 30 minutes order block or a 15 minutes order block. So it's just for you to open your eyes and be very careful about your trades. So right here on the Wednesday price action, marking out our 4-hour candle range high and candle range low, which serve as our drawn liquidity. In this 4-hour case, the price action that happened on the 4-hour time frame, it didn't actually offer a nice order block. It is a very large order block which swept liquidity. But in this case, experienced traders can take a first entry from here, this zone right here. This zone right here, experienced trader can take the Tosusu at the key time because it happened at the key time, and advanced traders can take this, can consider this as our order block, this zone right here as our order block, this right here. And it isn't actually bad also, because when taking that as our order block and marking here, right here, and putting our stop loss here at this swing high, then our take profit at this swing low right here, at this drawn liquidity. Remember the 4-hour drawn liquidity we marked out. So right here we can see how many pip stop loss, 6 pip stop loss and a 23 pip take profit. And this draw me to your attention that don't focus on the pip. Yeah, some people will be like, no, 23 pip is very small, I can't really cope with that because I have a $10 account, this and that. No. Look at this, a 6 pip stop loss and a 23 pip take profit. Even if it is on a $10 account, maybe your maximum risk is $1 or $1.05. In this case right here, you can use a 0.02 lot size, because even if you use a 0.01 lot size, it gave you a loss of 60 cents, and 60 cents times 2 is 1. So you can use a 0.02 lot size on a $10 account and still make a profit of $4 or $5 approximately, and it's giving us an RR of 4.2 RR, and that's a nice trade Wednesday offered us, only if you open your eyes and learn carefully from this. So without much time, let's move on to the Thursday price action, because Thursday also offered a nice entry on GBPUSD that also respected the order flow. So going back to the 4-hour time frame, which I told you that's where I saw all my entries. Going back to the 4-hour time frame, we can see here clearly that, and here comes the most trickiest CRT. I hate to position myself in this kind of situation, that one, liquidity would be taken out first, taken out second time, and taken out, okay, liquidity will be taken out first time and be taken out second time. These are the most scariest thing I don't like to see whenever I position myself for either buy or sell, because here it tricks traders that liquidity has been taken out. This 1 a.m. candle range high has been taken out by 5 a.m. Now right here, why did 9 a.m. do that? And your answer is this. This was the pre-manipulation. This was the pre-manipulation, and this thing that happened here may happen because of news, maybe CPI, NFP or PPI. This happened because of news, and that's why you are seeing this long wick right here. It manipulated and immediately dropped massively. So let's mark out 5 a.m. candle range high as our range high, because this was the range, the candle range high that was manipulated. And to be sincere, the range low is supposed to be our first draw on liquidity, and 1 a.m. low, because we are sure that 1 a.m. low should actually hit, should be our second draw on liquidity. Now projecting it to the 5 minutes time frame, projecting it to the 5 minutes time frame. Here we are on the 5 minute time frame, and remember we are on Thursday price action. First draw on liquidity, which is our 5 a.m.'s low, and second draw on liquidity, which is our 1 a.m.'s low. And observe here carefully, we also have an order block, a nice order block. If you can't position yourself at this peak top right here, at this turtle soup right here, then you can position yourself at the order block. And here is our order block right here, and you enter your trade from there. Boom, you have 8 pip stop loss and take profit randomly. Let's just say 30 pip take profit. So in this case, Thursday trade offered a 3RR, let's just say random, approximately 4RR, because 8 pip stop loss and 30 pip take profit. And you can see how you can grow your $10 very easily in this week. Even we are in an accumulation stage. Only if you open your eyes clearly, you can spot out trade even in an accumulation section. Yeah, price action wasn't actually good this week, but only if you can open your eyes, you can discover trades which gave a nice RR. First trade, remember, first trade gave us 4RR. I think second trade also gave us 4RR, and third trade gave us 3RR. And with that, TP, you have grown your $10 account to like 20 or 19 or $15, and it's something to close with the weekend. So that's just my opinion and observation on this week price action. So this video comes to an end, and we have been talking about 20 minutes. I really appreciate your time. Good luck, good trading. I hope you found this insightful. If you want me to drop more content like this, share, like, comment on parts that you don't really understand, and I'll break it down to the slightest details. And also, good luck, good trading. Zim Team cares. Thank you once more.